PulteGroup reporting results in the last hour. Let's get over to Diana Olick. She joins us right now with a special guest. Diana, good morning.
Good morning, Becky. Yeah, Pulte had a strong beat on the top and bottom lines in its Q1, despite affordability challenges and a growing concern in the macroeconomic environment. So joining me now is Ryan Marshall, CEO of Pulte. Ryan, thanks so much for joining us this morning. I stole your words right there. Those were from your release about the affordability challenges. Tell us how you did so well in Q1 and what you're seeing at the start of Q2.
Yeah, good morning, Diana. It was a really good quarter for the company. A few things that I'd highlight. We delivered over 6,500 homes, which generated about $3.7 billion in revenue. And we continue to deliver industry-leading gross margins of 27.5%. When we think about what's allowed us to deliver these kind of results, it's our industry-leading operating platform, our broad diversification. We're in 45 different metros across the United States, so we're a very large builder. And over 60% of our business is concentrated in serving the move-up and the active adult buyer. And the reason that I mentioned that is those two buyer groups have been particularly resilient in this type of economic uncertainty that we're currently in. So it was a big contributor to the results that we had in the quarter. We've got an unbelievably strong balance sheet. We have over $1.3 billion in cash. We've got very low debt, and our board in January authorized an incremental $1.5 billion in share repurchase authorization. We repurchased $300 million in the quarter, and all of this has yielded a trailing 12-month return on equity for our investors of over 25%. So there was a lot of success in the quarter, and we're very proud of what we were able to do in Q1.
Well, let's talk about those challenges ahead, though, which you noted in the release, because while the revenues did beat overall, we did have a miss on home building revenues, and you noted that was because of a 6% increase in the home price and a 7% drop in closings. Now, A, were you increasing prices, or was that just a mix shift in what was selling, i.e. on the higher end? And how do you expect that going into Q2 when you've got tariffs ahead? How is that going to factor into higher prices?
Yeah, well, maybe where I would focus the question would be on the sales that we had in the quarter. We sold over 7,700 homes in Q1. As you know, the spring selling season is a really important time of year for all of the builders, and Pulte included. We were hoping for a stronger spring selling season than what materialized. But 7,700 homes is a lot of homes. And we remain incredibly optimistic about what the future looks like. We're well positioned to succeed. We, would certainly expect to sell a lot of homes between now and the end of the year.
Right, but we need to talk tariffs, though. That is the elephant in the room. The home builders, the National Association of Home Builders, are saying it's going to add about $10,900 to the cost of a new home. What are you going to see at Pulte, and how is that going to factor into your pricing?
Yeah, it's a great question. And when we think about the impact that tariffs will have on our business, number one, we've got cycle-tested procurement teams that have done an unbelievable job getting in front of this and deploying different strategies and tactics to minimize it. The estimate that we have for our business is about 1% of our average sales price. So we've calculated it to be in the $5,000 range, so significantly less than I think what you've heard from NAHB. And I think it's just a testament to the platform that we have. We've highlighted that the impact of those tariffs will affect us later in the year. So the backlog that we have, the things that we have under production, we're protected on that. Later in the year and into next year is when we'd expect to feel the impact of those tariffs. I would highlight that our build costs have remained flat on a year-over-year basis. So when we think about the sticks and bricks and our maniacal focus on keeping our costs low, our teams have done a really nice job maintaining low cost.
And what about the consumer, though? You noted that they benefited from lower mortgage rates in Q1, but we've seen rates go up. In fact, we're just below 7% at 6.98% today. We don't expect rates really to come down. Plus, that macroeconomic environment that you noted, how is that consumer sentiment affecting you, and how are you going to address it?
Yeah, and we saw that throughout the quarter. So as the quarter progressed, February and March sales were two of our strongest. As we moved into April, we saw a little more volatility and choppiness, and I think it's to be understood that the consumer was dealing with a lot, whether it was stock market volatility or concerns around the interest rate or fears about tariff-induced inflation. There was a lot for the consumer to deal with. We saw a lot of consumers continue to move forward. There were some that have elected to take a pause. When we think about affordability, I mentioned that 60% of our buyers are in that move-up and active adult space, and they've handled the affordability challenges in a much better way, just given their overall personal financial platform. For the entry-level business, which is about 40% of our business, we've got really powerful and meaningful financial incentives that we can use to buy down that 30-year fixed-rate mortgage, and we found that to be a very impactful, meaningful benefit to that consumer as well.